welcome to Value Vest Daily. Before we jump into today's absolute bombshell of a story, we have to do our quick but very important reminder. Everything we're about to discuss is for educational purposes only. It is not financial or tax advice. You've got to do your own homework and always talk with a pro before making any big money moves. Okay, with that out of the way, let's get right to it. The markets are in a total tailspin this morning. It's January 18th, 2026, and it's all because of a political bombshell that's sending massive ripples through the economy. Today, we're not just going to talk about the chaos. Nope. We are going to take it apart piece by piece, understand what's really going on, and find that value investor's edge right in the middle of the storm. So, this is the headline that's absolutely lighting up every screen right now. A sudden, really sharp tariff threat aimed at key European allies. And the whole thing is centered on Greenland, of all places. Now look, this isn't just some political squabble. This is a genuine economic shockwave, and it's causing immediate, full-blown panic. And you can see the ripple effects in real time. Look at how fast capital is moving to price in this new risk. The euro, it took an immediate dive, hitting a 7-week low. It's simple, right? The threat of tariffs makes European stuff more expensive in the US, which could crush their exports and weaken their whole economy. US stock futures are tumbling because if there's one thing the market hates, it's uncertainty. And then there's gold, spiking to a record high. That is a classic flight to safety. When investors get spooked, they dump risky assets and sprint towards things they think are safe. This isn't random chaos. It's a very clear reaction to geopolitical fear. But here's the thing, and this is why we're doing this deep dive today. For someone who is a disciplined value investor, all this panic, this volatility, well, this is our playground. This is exactly the kind of environment where the market just completely overreacts, where fear disconnects a company's stock price from what it's actually worth. This is where the bargains are made. You know, I've seen this movie before. It reminds me so much of navigating the China trade war back in 2018 and 2019. The headlines were terrifying day after day. Great companies, solid industrial names just got hammered. But the people who tuned out the noise and focused on the fundamentals, on the real long-term value, they saw some incredible returns when the market finally came back to its senses. This has that same kind of feel to it. So here's our game plan for today. First, we're going to break down this tariff bombshell. Then, we'll dig into the why of it all. What's this Greenland dispute really about? From there, we'll weigh the short-term risks against the long-term opportunities, and I'm going to highlight 3 specific, undervalued companies that might just be positioned to thrive. And finally, we'll wrap it all up with an actionable playbook for you and your portfolio. All right, Section 1, the tariff bombshell. Let's start by really unpacking the nature of this threat. This isn't just some vague tweet. It is a specific, timed proposal that has just injected a massive dose of uncertainty into the global economy. This is the kind of thing that has every CEO with a global supply chain waking up this morning and completely rethinking their strategy. And that leads us right into Section 2. Because to really get a handle on the investment opportunity here, we first have to understand the dispute itself. I mean, why on earth is this remote, ice-covered island causing such a firestorm in global finance? Well, the answer isn't just about a piece of real estate. It's about what's on it, what's under it, and its absolutely critical strategic location in the world we live in today. So the threat here is crystal clear, and it's aggressive. A 10% tariff is scheduled to hit a whole list of major US allies. We're talking Denmark, Norway, Sweden, France, Germany, the Netherlands, Finland, and Britain in just a couple of weeks, February 1st. And there's a serious ultimatum attached. Those tariffs jump to a crippling 25% by June if there's no deal on Greenland. This timeline puts everybody under immense pressure and makes it pretty much impossible for any company doing business across the Atlantic to plan ahead. Now, at the very heart of all this are these things: rare earth minerals. You hear that term tossed around a lot, but what are they really? Think of them as the secret sauce in basically everything modern. The super powerful magnets in an F-35 fighter jet and a Tesla, they need them. The stuff that makes the colors pop on your smartphone screen, that's them too. Those massive AI data centers, they can't run without them. And Greenland? Well, Greenland is believed to have one of the world's biggest untapped stashes, completely outside of China's control. And that really frames the bigger picture. See, Greenland isn't just a potential mine. It's a cornerstone of US defense in the Arctic, where the Thule Air Base is. It's a vital spot for climate research, giving us crucial data on the health of the planet. And, as we just saw, it's a treasure trove of the minerals that are going to power our entire 21st century economy. controlling Greenland means having a huge say in technology, defense, and climate policy. It's a geopolitical grand prize. And don't for a second think Europe is just going to take this lying down. Oh no, they have already come out with a unified front threatening a massive 93 billion euros in retaliatory tariffs of their own. This is exactly how trade wars start and spiral out of control. A threat gets met with a counter threat, and suddenly everything from German cars to French wine gets caught in the crossfire. The sheer size of this number just shows you how serious and damaging this whole thing could get. Okay, so that's the problem. That's the chaos. Now, let's make the pivot in Section 3 to the solution. How do we, as investors, actually process all this? How do we separate the terrifying noise of the headlines from the signal of long-term opportunity? This right here lays out the investor's dilemma perfectly. On the one hand, the short-term risks are obvious and they're painful. Volatility is through the roof. Tariffs are basically a tax, which could drive up inflation and squeeze profits for anyone who imports stuff. But on the other side of that same coin, every single one of those risks creates a potential opportunity. Volatility creates bargains in great companies that get tossed out with the bathwater. A tariff scare could speed up a strategic shift to US-based resource companies. And in times like these, companies with powerful, durable competitive advantages, what we call moats, become even more valuable. This is the mantra for moments just like this one. Right now, the market is fearful, very, very fearful. And while we should never be reckless, Buffett's timeless wisdom reminds us that the absolute best time to find incredible value is precisely when panic is gripping the headlines. Our job isn't to panic with everyone else, but to calmly look at the new landscape and find assets that have been mispriced by fear. And it's so important to remember this tariff threat isn't just happening in a vacuum. The market was already a little on edge. The Federal Reserve is meeting next week, and that always creates jitters about interest rates. We're right in the middle of earnings season, with giants like Netflix and Intel about to report. On top of all that, there have been these growing concerns that the huge AI stock boom from last year might be due for a correction. So this Greenland news is like pouring gasoline on an already smoldering fire. Which brings us to the part you've been waiting for, Section 4. Let's start hunting for that signal in all this noise. Based on this new reality of geopolitical tension and a fresh focus on strategic resources, where can we possibly find some undervalued gems? Our first idea is a company that's sitting right at the center of this whole dispute, Freeport-McMoRan, ticker FCX. This is a direct play on that critical minerals theme, and it's a true global powerhouse that's fundamentally anchored right here in the United States. So why FCX? Well, first off, this entire geopolitical mess shines a huge spotlight on how strategically important it is to have domestic or at least friendly sources of critical minerals, so we're not so reliant on shaky supply chains. Second, FCX is a global leader in copper, and copper isn't just some old industrial metal anymore. It is the metal of electrification. You simply cannot build EVs, upgrade the power grid, or construct those massive AI data centers without tons and tons of it. And from a value perspective, it's currently trading at a price-to-earnings ratio that's below its peers, which suggests it might be on sale. And here's a nice little bonus. FCX pays a dividend of around 2%. For value investors, that's a key feature. It means you literally get paid to wait for the market to catch up and recognize the company's long-term strategic importance. It gives you some return even while the stock is bouncing around with the rest of the market. Okay, for our second pick, let's switch gears a bit. We're going to go from resources to resilience. We're looking at JPMorgan Chase, ticker JPM. Now, I know this might seem a little weird since bank stocks can get tossed around in volatile markets, but in chaotic times, quality is king. And JPM is without a doubt a financial fortress. So why JPM right now? Because when things get messy, the market often runs to the safety of best-in-class names. JPM has proven over and over again that it can navigate crises, and it often comes out even stronger. It has a massive competitive moat built on scale, trust, and deep, deep client relationships. And even with all this uncertainty, the outlook for their core banking business was solid, and its strength is fundamentally tied to the huge and resilient U.S. economy, which is a lot more insulated from these specific tariffs than others might be. And the key number from a value perspective is right here. It's trading at a PE ratio of around 11. For a company of this quality, with this kind of dominance and consistent profit, well, that's a very reasonable and you could argue an attractive price to pay for a piece of the business. All right, for our third and final idea, we're looking at a smaller name. And yeah, it's a bit more speculative, but it ties directly into our core themes of energy security and critical minerals. It's Energy Fuels, ticker UUU. Now, what's so interesting about this one is that it's kind of a double play. First, it's a key player in the domestic U.S. uranium market, which is critical for nuclear energy, as the electricity demand from things like AI data centers just continues to explode. Clean, reliable nuclear power is getting a serious second look. But beyond that, the company is also making a big push into processing rare earth minerals, which ties it directly to the strategic theme at the very heart of this Greenland dispute. And right here, you can see the deep value case. Its price-to-book ratio is less than 1. What does that mean in plain English? It means the stock market is valuing the entire company at less than what the assets on its balance sheet are actually worth. For a classic value investor, that's a huge flashing sign of potential undervaluation. It suggests there's a significant margin of safety already built into the price. Okay, let's bring it all home in our final section. We've analyzed the problem, we've identified some potential opportunities, so now, what are the concrete, actionable steps you can actually take to navigate this environment? Here's your action plan. Step 1. Stick to the basics of value investing. Screen for companies with low valuations and rock-solid balance sheets that can handle a storm. Step 2. Get practical. Use online stock screeners. Finviz is a great free one to actively look for companies that don't have a lot of exposure to Europe. Step 3. Be proactive. Take a good, hard look at your current portfolio. How exposed are you to a potential trade war? Step 4, and this is the most important one, stay disciplined. Focus on the long-term fundamentals of the business, not the short-term drama in the headlines. And finally, Step 5, think strategically about diversification. Does it make sense for you to add some exposure to themes like domestic critical minerals that could actually benefit from these kinds of geopolitical shifts? So, if you take one thing away from our deep dive today, let it be this. Today's headlines are scary, and the market chaos is very real. But that chaos creates a thick fog of noise that hides the true underlying value of great businesses. A disciplined, patient value investor has the tools to cut right through that noise, find the signal, and act on it. And that brings us to the end of our analysis. Look, this situation is changing by the hour, and there are definitely other opportunities and risks out there. So now I want to turn the question over to you. In this crazy environment, what high-risk, high-reward opportunities are on your radar? Please put in a comment if you want us to deep dive into any specific high-risk/reward opportunities. And finally, please subscribe, like, and share ValueVest Daily for daily learning opportunities before you put your money to work.